After day trading for the past 4 years, I finally started to understand one very simple premise with day trading, with investing in general. And I'm going to talk about that right here in this video. This could save you a lot of time, a lot of heartache, and a lot of money if you are able to understand this one very simple idea. We're going to talk about it right here in this video, how this applies to trading. It's an emotional idea and a simple just idea of how stocks move. We're going to talk about it right here in this video, so make sure you guys stay tuned. What's going on, guys? Patrick here, and like I said in the beginning of this video, I've been trading for almost 4 years now, which sounds kind of crazy because it hasn't felt like it's been that long, but I guess it has been that long. I started this channel back in 2017, and well, it's 2021. Here we are. I'm getting old. I need to stop. I need to give up. Yeah, never mind. I'm never going to give up, never going to surrender. So today, let's talk about this idea that it's something that I've really kind of started to understand the more that I trade the large caps, futures. And now this also applies to small caps, cryptocurrency, anything really that moves on a chart. If you have candlesticks on a chart, well, this idea applies to everything that moves. The emotional, psychological idea here. The issue for a lot of people, especially for me in the past, was I believed, number one, that when a stock was overextended to the upside or to the downside, that it had to pull back, right? Or it had to pop back up. Now, you can see this move here. This is on the 15-minute chart, like I said. These candles going from the 75 up here to 94, up here to 103, pushing. This is 1, 2, 3, 4, 5, 6 candles really that pushed up and made new highs. The thing is, if I have this line on the chart like most people do, which is my EMA, that red line, and then breaking out over the resistance, first off, number one, we're in an uptrend. We're breaking through resistance. This should be a long, right? All day long. But the problem is, a lot of times what will happen, especially for me emotionally, mentally, and all of that is, let's say this pushes up here to the 92. It made such a big move out of nowhere. Just popped through that resistance and then squeezed up there. We see, oh wow, look how overextended this is. And when I say something is overextended, I'm talking about basically the market or the stock or whatever it is making a drastic move to the upside really quickly and removing itself from either a consolidation area, a breakthrough, or the EMAs that we kind of look at, the EMAs being a support area. Now, as this moves up, the more and more that it moves up, the better chance that it does pull back, right? That it pulls back to the normal moving area, which would be that moving average. But the problem is, let's say I short it, okay? Let's say, okay, I see this wick on the top of that candle there, and I'm like, okay, I want to get short. So I short right here. I'm like, okay, I'm going to short there. Now, the problem is the next candle opens and it squeezes higher again. And I'm thinking to myself, well, it's got to pull back, right? Like it's just got to pull back. That's two candles in a row. It's overextended. It's got to pull back. Well, as you can see, it goes ding, 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 ding. 4 more candles to the upside there at that point. And it does end up pulling back very close to the entry. You can see later on in the day, it did pull back to the 84, which would have been, a winning trade. If you see there, that line, that's my entry here. It did pull back below my entry. But the problem is, can I hold this trade? First off, it's not a good trade, shorting, like I said, but that emotional idea coming in there around this premise of something being oversold or overbought. And when something is going drastically up, being overextended, this mental idea clicks on in your head where you're like, hey, I should short, right? Like this is gonna pull back. Like it's gonna pull back. But the problem is, like I said, it goes 1, 2, 3, 4. So at that point, what is my maximum risk on these trades? If I'm trying to risk maybe 5 to 10 handles max, like there's no way I'm losing more than 10 handles, right? This stops me out 100%. I'm getting stopped out because especially if it pushes up there, and then let's just say for some crazy reason, right? I'm holding and I'm holding, and I'm like, okay, if this thing pushes above this candle, or if it pushes above this candle after that wick, I'm going to get stopped out. Like, I got to get out at that point. So I'm going to get out for a major loss at that point, all the way up here possibly. So again, it's that emotional idea. The stock is overextended to the upside or to the downside, and instantly I'm like, okay, well, I want to buy the dip, or I want to short the top here because I think that this is going to pull back. Now, same premise here. If you look, we've got this support area here. We get a drastic drop below that support there, that ding, ding, ding. We get that drop below, and I'm thinking to myself, okay, look at this candle. It pushes back up there. It pushes up there to the 64s, and then it continues lower. But look how oversold it is. You know, quote unquote oversold this move is. It goes ding, ding. I'm thinking at this point, okay, well, it's going to bounce, right? It's going to bounce off this previous little bounce here, this 54 area. It's got to bounce, right? Like, it's so oversold at that point, mentally, emotionally. I'm thinking that this has to bounce, right? Like, it's just got to go back up at some point. And what do? I end up jumping in there long, and then it crashes down another 10, 20 handles. And guess what? I end up getting out for a loss. I end up getting out for another loss because I'm either trying to buy the dip here on this overextended move to the downside, or I'm trying to short that move to the upside that is overextended. So the premise of something being overextended as a trader, it's one thing to do, you know, for investing. Let's say you're investing long term and you're holding a stock for months, and you see that Apple has a big sell-off. It looks overextended on the daily. You know, it's to the downside, like it's a dip buy. And you're okay with holding that stock for that move up later. That's one way to look at it. But when you're trading on a smaller time frame, when you're trading, you know, 15, 20, 30 minutes, maybe an hour a day on these trades, you can't just buy anything that's overextended or short anything that's overextended and just hold it and hope and pray that it does go back up, which you can see, guess what? We got stopped out there, but the market did move higher after that dip lower. So it's not to say that these overextended moves can't work for a long-term type of setup, but when it's coming down to trading, you know, the actual action that's happening in that time frame, that smaller time frame, trying to buy those dips is never a good idea on these overextended moves to the downside or the upside, trying to short those pops. Because, like I said, that maximum pain tolerance is going to kick in at some point, and you're going to end up losing money on that trade, even though, like I said, you end up being correct in the bigger picture. You're correct that the market does end up moving higher. This happens at 3 a.m. 5 hours later, the market does move higher from that dip buy. But again, are you able to hold through either that pop or that drop? And that's one thing that I've noticed a lot with me is I do end up, you know, buying these dips or shorting these tops, trying to call the top or bottom being overextended. And I end up doing that. I end up making the trade, and I end up getting out of the trade, getting stopped out. And then guess what? An hour later, the market does move back in that direction that I originally had predicted, or I guess had planned traded for. But I'm not able to hold through that drop or that pop because I end up getting squeezed out, or I ended up just having to get out when the market does start to move lower from that dip buy. So that's that mental, that emotional idea here of this overextended idea. Overextended to the upside or the downside. Like I said, this applies to stocks and to futures, really anything that has, you know, candlesticks and EMAs and lines on charts. These things get overextended, but just because something is overextended does not make it a good trade, especially when the market is booming higher, because you can see this is 15 minutes. So, you know, 2 hours later, the market's still booming higher, being overextended. You can see how overextended this does get. Like this is, let's just say like the 20s EMAs down there. Look how far, that's a lot of room between that moving average. And you can see the market does end up moving back to that moving average at some point. But again, it does go from 9:30 squeezing up there all the way till about 11 o'clock, 10:45, and then pulling back. But there's no way that I can short here, holding through this. And the thing too is it does pull back to my entry, but did it really give me much profit after making that much risk? You know, I risked 20 handles and I made 3 handles in profit. That's not a good risk to reward, and that's not a good way to trade. So again, like I said, when something is overextended, if it's going up, there's probably a good chance there's a reason that it's going up. There's momentum behind it. So trade the action, trade the momentum. If something is selling off to the downside, well, then ride that momentum to the downside. Don't be afraid just because something is overextended that you can't trade that action. If there's a strong trend, there's a strong momentum shift, a move happening in the market, well, capitalize off of that momentum. But don't be the guy trying to fight the trend. I think that's really what it comes down to here, is fighting the trend on these oversold, these overbought conditions when you're thinking to yourself, it's got to pull back, right? It's got to pull back. Well, it doesn't have to pull back, and it doesn't have to go back up. That's just how it works. If the momentum in the trend is pointing in a certain direction and it's strong and it's making that move, let it make that move. Let it make that move. Let it happen. And that's really what you should do. You should be capitalizing off of that overextended move because, again, like I said, that market, it's moving up strong for a reason. There's momentum there. There's something going on. So you should be riding that momentum, not trying to fight that momentum. And like I said, you can short and, you got this risk, but it's like, if it does pull back, what's your actual profit on that short if it does pull back? So really, at this point for me, it's like, I got to stop fighting the trend, stop fighting the momentum. If the momentum wants to go higher, well, it's time to ride that wave. So remember, the market moves in waves, constantly making just waves and waves and waves. Be a surfer out there. Ride the wave, baby. Ride the wave. On that note, I'll talk to you guys later on.